Hello, traders. It's 8 a.m. Chicago time on Tuesday, the 19th of June, 2018. Thanks for joining me again. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning, a lot of action as a result of this tariff war that the U.S. and China are going through. We have a very clear allocation to safety. Remember, the market does not like uncertainty. And throughout, since the reopen last night, very interesting trade to watch through the extended hour session. What we have is the DAX down 1.38%, the Dow down 1.4% or 351 points. Crude oil is also down 1.45% or 94 cents. The NASDAQ's down 1.27 and so on and so forth. Gold is down $3.40. The cable and the euro are down also. What's up if all of those are down? The Japanese yen, safety, Treasury, the U.S. Treasury bond, safety again up 0.5% or 25 ticks. The U.S. dollar's up 0.36 and the Bund is up 0.31%. And the U.S. Treasury note also up the same. So this is this is what we're looking at currently as far as what the market stance is. We do have. We did have some numbers that were released this morning, housing starts, building permits, and so on. And we have some ECB speakers. We had some ECB speakers that came out. But today is a news-driven day, and how convenient for us to be hosting a leading news service this afternoon at noon Central, 1 Eastern. If you haven't signed up, please do so. It's today for about 45 minutes, New Central, 1 Eastern. Again, the market's driven by news. Sign up to ft71.com/CT News Spotlight. That'll be going on over lunch today. So let's take a look at what we expected yesterday, and then we'll spend a fair amount of time talking about what we have going on today. So yesterday we discussed these three possibilities. The primary scenario being responsive, that gets tangled in the 2772 area, and then the point of control at 2775.50, and then ultimately reaching 2780. So these are the key areas of scenario one, and that's the scenario that was dead on. Again, that's not the goal. Is not to be right. The goal is to make money and to process our trades as per plan, because that's where the money is. That's where the treasure is. But the other scenarios were a test up, and then it becomes initiative away and starts moving away. And then scenario three is aggressive responsive, which it looked like on the open. It looked like we had a pretty strong push down and an even stronger push up, and we might become aggressively responsive all the way back to 2788 and a quarter, being that that is the MC point of control, or the most valuable price in this area. However, scenario one was the one that worked out. Here's what it looked like. There it is. We opened. Looks like a drive. We have nice driving behavior early on. But then we pull back to the mid right here. Remember this blue line here? This blue line is the mid. That is the high plus the low of the session divided by 2. It's the middle of the session. And then on the retest, we get a higher low and a push all the way back to the open. That makes it an open auction. And then we get back into the prior day's range. The prior day's low is right here, this green line, 2765.50. And so we get back into the range and we consolidate. We finally extend the opening swing high, which was a 27.69, we finally extend that out by 3 ticks, and that's the first sign that buyers are likely in control. Pulls back to the open, close to the mid, doesn't quite get to the mid VWAP low, and then that's the first key setup of the day. And where does it go? We have an 8.25 point impulse directly into the prior day's point of control, right? Okay, and then we get the continuation trade, retracement to mid, retracement to mid, stock zone, all that good stuff right here. And then we continue to consolidate, and we ultimately get to the 2780 target. Remember, that's the key target of the day. Of course, it ran out of time, but the expectation was once it gets there, it would consolidate and hold steady in the middle. So one of the key features we learned from yesterday, which got absolutely nuked overnight by these tariff, pardon the expression, tariff pissing match, is that we tested below the prior day's range. So we auctioned below the prior day's range and found buyers. We could not find initiative sellers. This is the chance for those sellers to take this territory and just crush it. And they could not. They found buyers, and we were back into the range. We consolidate in the range here, set up a base, and take off. And that base shall remain for the rest of the day as the stable support for buyers as we go along. And so those are the key elements yesterday morning that are informing the scenarios and which side we want to be trading on. Okay. The other thing is we have a low volume node from Friday, a double distribution. And what we did yesterday was completely confirmed and accepted this high volume node and the point of control. You notice these 2 points of control, these two purple maroon lines, are on top of each other. This is a market that does not mind trading in the 27.75 area and is happy to hold steady and balance there while news continues to feed the trade. However, we did put in a lower low, lower high. Value was the same, so I wasn't too concerned. I did not believe, given the configuration here, I did not believe that the market's really bringing in sellers just yet. It looked to me like the market was holding steady and in balance and is waiting for the next move. So that's what I was looking at, and it finished strong. It finished strong, and under its own power, the market had a very high probability of taking out the low volume node at 2780 and continuing through and regaining last Friday's close, which was a weekly close at 2784.50, and then eventually today 88.25. Again, all of that got blown out of the water as the narrative changed underneath, as the sand shifted underneath the market. As I said, with this tariff stuff. So let's look at the overnight. The overnight, we reopen, consolidate, and then here's your U.S. announcement on $200 billion of tariffs at 10% being potentially levied on Chinese imports. The SOC for that, the SOC for that is marked at 27.78.25. If you use the master levels, the FT71 master levels and IRT, you'll have that marked 27.78.25, and the market just blows up. This looks awesome on S5 Bookmap. Let's look at that. So if we go back, a lot of selling overnight. There it is. So if we look at what was going on, there's the last print right up here, 27.78. Let's look at that a little bit. There's the last print, 27.78 and a quarter, and then sellers start stepping in. You see sellers sell, 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 hitting the bid, and more sellers come in. You see these dots getting bigger and bigger. Sellers, 170 lot, and so on and so forth. 200 lots, 200 lots, all aggressive sellers. The bid gets cleared out of the book, and then we have stop runs at 70. That print is a VWAP of 27.70 and a quarter for 789, and then the market stabilizes and then continues to sell off, and then it recovers to this zipper here, very clean, and then the Chinese respond with their own tariff retaliation right here, 27.6675, and that sends the market up a little bit, and then later on into a further tizzy as we go through, right? It came out right here. The Chinese response came out right here, and there it is, the bid getting hit again and again and again. You see these up, 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 and a big slip right there. Big size on the sell side, 933 lots sold, and it's just been a very nice I know this doesn't sound good for investors, but this is my kind of trade. At 1 o'clock, right after the European Open, we had the market slip through this 27.49 and a half area with a very large print. 2,100 contracts just hit the market. Boom, exploded downwards and came up. This is a typical collision behavior. Collision, break through, pull back to the collision area, and then continue. So I'm watching that area, 27.49.50. I spoke about that this morning a little bit, or I noted that in the Convergent chat room. And then there's the collision again on the way up, and so that becomes somewhat support, and then now we're balancing in that area. So since then, we've been rallying a little bit. But overall, we're opening in a relatively large gap with a fair amount of uncertainty. Expect high volatility on the open today. So what does this profile tell us that's in front of us here? What does this profile say? It's saying that the market had a long liquidation, two major pushes, and we have multiple distributions. It's a trend day down. The overnight session had 45 points of range, or thereabouts, with heavy volume, 374,000, 3 times the normal volume, at least a little over 3 times. Inventory is 100% short, and we are exploring into areas we have not seen since the beginning of May. So that's where we stand this morning. The possibility of the probability of closing the gap is very remote. The gap is 45 some odd points up, and a quick look at the composite is warranted here. Let's get rid of these boxes. So these are microcomposite profiles on my composite chart. Each bar on this chart represents 1 day of pit trading or cash trading, RTH trading. We've gapped up and we've moved to 27.96, and we've been coming off with these white candlesticks on the way down that we've seen over the last couple of days. We're one time framing down on a daily basis, but we continue to try to hold value higher, and we've shifted back to this composite here. We've moved into this composite down here. And overall, that's going to likely act like as support. So the point of control of this area is 27.2375. That is the most accepted price. That's this black line right here. That is the most accepted price in the area. Remember, in March, in the June contract, it was 27.20, and now it's 27.2375, and we've pulled down into it and have been bouncing off of it. It is the next key support here, 27.45.50. It's also the low volume node that we battled a lot on the way up. Remember, we bounced against this several times before we're able to gap through it and continue higher. Resistance now turned support, and that's where things stand. So we are in the pullback phase, the retracement phase of this run up, and this news is helping that out. Okay, so what does that mean for us? Again, these gray bands are my stock zones. These are the areas I'm looking to engage with the market based on the bias that I have. Primary scenario. Let's shift this up. I'm going to need my flex levels up. Primary scenario. So the market got down as far as 27.35.75. Pretty deep. The primary scenario currently is a wide open auction out of range. There are strong incentives for both buyers and sellers to interact. I expect both sides to be active this morning. Here's your SOC for the China news. Here's your SOC for the U.S. release, 27.78 quarter and 27.66.75 yesterday's open. And those will become the areas that we're likely to revisit once the rhetoric and the BS of back and forth between these countries subsides. That's where we're looking at. Those are the key areas we're looking at retesting. This morning, a wide open auction. Looking for it to continue. And then I'm looking for an impulse up. An impulse up that carries us back to the prior day's range and a consolidation, and eventually all the way back up to 27.65.50. Okay, it brings us back to where we were yesterday. We're likely to end up with a lower high, lower low with a value area that's lower, but the market is likely to respond. If you watch the price action this evening, you will have noticed that buyers are there. Buyers keep seeing value and excess in these lower prices and are stepping in. But with the news flow coming in and the fact that more and more participants are allocating to safety, it keeps pushing back. But overall, it's recovered quite well from 27.35.75 to now 27.52.75. It's done pretty well recovering from the low. Again, this is all news driven. Okay, the secondary scenario, I forget what color I had. I don't know. I'll just use this one. The secondary scenario is an immediate response, strong immediate response that gets us into yesterday's range, and then the market runs out of steam, drifts lower, and starts spurring on the movement to back to the value area overnight, the point of control, and bouncing off of this 27.45.50 MCLVN area that we've bounced off of in the overnight session a couple times before giving that up. That is the old resistance turned support. That's what I'm looking for. Pretty good range for today in either case. Plenty of opportunity today. Okay, so this is not one of those days you want to go and put on your biggest trade first thing in the morning. It's not. I know that everybody's going to want to or is incentivized to get in here and put on their full boat. You know, if your unit size is 4 contracts in the ES or something, you just want to just jump in there with 4 contracts and catch this big trend. This is not that kind of day. It really is not. This is a day where you trade with droplets, 1 lots or whatever, until you find out which participant has the power. It'll take a little bit of time to figure that out, the first half hour, something like that. And there's a lot of price risk in doing that, meaning you might end up catching a worse price. But this could go either way. So what you want to do is just keep your sampling going throughout the day, as opposed to, blowing your whole wad at, right at the open, being limit down, calling your broker to extend your limits, or you extending your own limits and defying your risk plan because the market is moving and you can't just step aside and you just keep swinging at full size all day long. I'm sorry, but that is just stupid. It is just stupid. Your first job is not to make money. It really isn't. Your first job is to stay in business in trading, to continue to be able to trade. That is your primary job, because you're not going to make money if your risk is out of whack and you're not able to trade anymore and you have to wait for money to be moved in and you're depositing more money into your account and all that nonsense. Please don't do that. Start small today. There's going to be a higher volatility. The VIX is likely to move up, and let the market decide with the smallest risk possible so that you can get a feel for what kind of waves we're going to surf today. Once you get a good feel for what waves we're surfing today, and you can see indications, clear indications in the auction itself or in your method, in your trading plan, which direction is likely to dominate, then go ahead and jump in with more size. For me personally, I'm going to trade sixths, eighths, something like that. And I'm going to be building credit. I'm going to look to build credit for the day. And then I'll get aggressive a little bit later in the day, probably after the initial balance and after the first hours. And plenty of time throughout the session for us to see some action, okay? What a day to have a news webinar. The third scenario is one that is initiative down, gets us moving to 27.45.50, impulse up, and then gets aggressive on the way up. And that's likely to take us back to the 27.70 area. That's scenario 3. This is an excess low type of scenario. This scenario looks like the market just cannot go lower. It just cannot have lower prices. It's seeing prices as low and is jumping in and pushing the other way very, very aggressively. That's scenario 3. That's what we've got for today. Please remember to sign on today, noon Central, 1 Eastern. We'll be talking for about 45 minutes about news and news feeds and how we use the news. It's even if you don't use a news service, it's important to know what's out there. Good luck, everyone, and I'll catch you tomorrow. Take care.